Okay, good afternoon, everybody. Today's June 11th, 2021. Here is your weekly take on the market. I'm your host again, Scott St. Clair. I'm Senior Product Coach here at MarketSmith. Take a moment to read the disclaimer. We will talk about stocks and the market, educational purposes only. Okay, we're off. So I'm going to do the gauges all green. I think it's been the first time in a long time that I've done all green. So that should be a sign that the rally is over. But it is what it is. It's hard to argue with the market being not green if it's at or near all-time highs. The leadership is improving a little bit. There's stocks to buy. It's not smooth sailing. There are some hiccups along the way. You can get in something and it could be acting great and announce a secondary, for example, and get hit really hard. But overall, there's leadership. It's pretty broad. And even the old leaders are starting to perk up a little bit as well. So it's kind of quiet, though. It's summer. So, it's not really historically a very big time seasonally to be in the market to see, price gains, but it is what it is. And then your portfolio, very personal, obviously, but you should be monitoring your progress. Keep good records. Good records will really help improve your performance. One thing I've really improved on since I came on to IBD is my record keeping. Done a much more thorough job on keeping records. I can tell you my performance month to month ever since 2010 when I first started at MarketSmith. I didn't do that as diligently before. And I think it really will help your performance. You'll start to see when you're doing well and you'll start to recognize when you're doing poorly. I know some people keep week to week. I used to keep week to week, but I felt like it was influencing my performance a little bit. Like I was too worried about the minor wiggles. So I think monthly is fine. And it's not that hard to do. Download your statement from your broker, save it in a folder on your computer. I dump the performance into Excel and track up or down that month, and then I have it graphed in Excel so I can get an equity curve. And again, I really feel like it's improved my performance immensely in the last few years. So let's go to the markets, and here, let's just get all this out of the way. We're going to go to markets. We're going to go to the industry groups, and then we'll go over 3 stocks. And then last but not least, we'll go to the quote of the week. Okay, so here's the NASDAQ. And, it's above the moving averages. Fine. It's a laggard for sure. You hit 14,175. There's your relative strength line. You made a new price high, but you definitely did not make a new relative high. And as we approach this high right here, I don't think that the RS line is going to be able to take out that peak. That would be unlikely. That would be a really gangbuster move in the market. But honestly, it better take out that peak. It's relative to this peak. If it doesn't, it's going to bother me a lot because you'll have a series of higher highs and a series of lower lows relative strength wise. That would be a red flag for me. And I probably won't own any tech stocks. Right now, I have very little exposure to tech because it hasn't been working. It's not that it's been terrible, starting to perk up. There are some stocks starting to round out. CrowdStrike, Zscaler, PayPal. What are some of the other leaders that I've noticed are starting to round out on the right-hand side? C Limited is, very close to new highs. But I want to see some relative strength in the NASDAQ before I start putting more equity exposure portfolio percentages in those names. The S&P, I don't know. gosh, super quiet day. And look, the market just closed 15 minutes ago, so it might not be fully updated, but still was a very quiet day. And let's go to the Russell. Now, the Russell is kind of a strange index. I guess I can't remember what, I think it was 70% of the Russell's performance or price action in the last week, I think it was due to AMC. It was like a really like a huge percentage of the gain in the whole index was due to one single stock. So highly unusual for whatever it's worth. The one thing about the market is that stuff that the kind of the meme stocks, for lack of a better term, would normally bother me, but it doesn't seem to affect the overall market. So you have these tiny pockets of really highly unusual speculation, but yet the market didn't go down. And even Bitcoin, I really would have thought that the animal spirits, the speculative fervor in the whole market would have gotten hit a lot harder, with Bitcoin off 50% from its highs. So there's value in what the market's doing, but there's also great value in what the market's not doing. So a market that should be going down, but it's not going down. That's valuable information. And then last but not least, emerging markets. Building this really large, well, I don't know if large, but cup with handle. Interesting. Let's see what it looks like on a weekly. It's this big cup. Relative strength wise, emerging markets have been terrible. Maybe one day they'll outperform. I don't know. It's been a long time. Let's go to a monthly. You can see there's been a tremendous amount of underperformance since the old, brick days, when you had everybody had to be in Brazil, Russia, India, China, the BRIC acronym. But you're at or near all-time highs, and you have a huge base, which is very interesting to me. I watch emerging markets. I like the growth there, but I want both. I want price action and fundamentals. And the price action is not terrible, but it's not confirming my theory that this is an area that should grow faster than the US. So if it's not, that's my my hypothesis, so to speak, and so far it's wrong. My hypothesis is wrong, but I'm watching that, looking for some type of change. Maybe if it broke out of that, that would be something that would maybe signify a change. Let's go ahead and go to the industry groups. Retail, consumer, electronic is number one. There's only 4 stocks in the group, so not really that important. I don't know if important is the right word, but I don't put a lot of weight in a stock group that has 4 stocks. Oil and gas still holding up relatively well. U.S. exploration is number 2. Retail department stores 3. Let me pull this up so we can see. I don't think it's really changed much since last week. In fact, I don't feel like the market's really done anything since the video I did last week. So I look at this a lot. One thing about doing this work, making this video, it forces me to stay on top of these things. So it's kind of good, because sometimes I can get away from this. I can kind of just assume they're all the same and just stop looking, and then miss a change in trends. So it's nice that this video forces me to do the work. It looks very similar to what it looked like last week. Okay, so let's look at 3 stocks. I'm going to start with BRKS. Building this cup with handle, showed up on the the near pivot list. So if I go to open stock ideas, near pivot, and there's Brooks Automation. I like the group semiconductors because semis are a great growth group, and they've been underperforming for a while, but starting to move back up the food chain. NVIDIA is acting great. I talked about NVIDIA last week. Let's go to the weekly chart. So you have this, pretty good cup with handles set up. And if I open up the related information panel, Lord Abbott, great fund managers. They follow the style, so to speak. They were on Risha's podcast last year or sometime. They were on a while ago, but I like their strategy, the way they thought about stocks. So it's good to see they're in there. See a big jump in ownership as well, 501 to 583. So you have some new funds in there, and then the fundamentals are really strong. I don't own it as we sit here. It just came on my radar this weekend, when I'm doing my work, but setting up. FRHC, kind of an eclectic name. The strength in this name is very powerful. It's really, 3 strong weeks. Look at the volume is increasing week by week. It broke out today. I like double bottoms. I like shakeouts. One of my favorite patterns because, if you owned FRHC and you owned it from 61 to 44 and then it rallies to 58, you probably think, oh, I've survived the shakeout. And then wham, it really gets hit hard, 58 down to 42, 32% deep, not too bad, but deep enough to really cause some some stomach ache if you own it. And then, gosh, it just seems to go up every day. So the shakeout +3 rule is how I bought it. I bought there on that that day right there where the volume was up, and I just used the shakeout +3 rule. At the pivot, I thought about buying a little bit more today, I might add, but it's just the number of days up in a row is great, but also makes me wonder a little bit about maybe there could be a shakeout. And this is kind of a, it's a different name for sure. This is like, don't try this at home. I know that it's a Kazakhstan broker, and a lot of people might say, no, thank you. That's fine. It's fine. I am not afraid to lose. So if I buy it and it goes bad, I'll just get out. There's just, I don't know, something about it is appealing to me. This last quarter is really, really huge. Look at those numbers. The quarter before that is really huge. And there's been really big strength in overseas brokers. Tiger, which is TIGR, I think the name is Uptech FinTech or something, has been going really well. And then Futu, FUTU, made a huge move. So, there's no sponsorship. I was looking on the web, and I noticed that some hedge funds, some really big name hedge funds had a position in it, but hedge funds are, they're not as sticky as mutual funds. So just an interesting name. And it's kind of I know that there's a guy on Twitter, I can't remember his name, but I'm fairly certain he won the US Investing Championship or one of the divisions last year. And I noticed that he mentioned this was his largest position, which is interesting, because it's a little bit different, but good price action, acting really strong. It is what it is. Take it for what it's worth. And then this one, I wanted to highlight this name because just the craziness in the stock market. One of my friends texted me and said, ORPH, OMG, look at how it's moving. And, it went from 10 to 77, I think, in a matter of minutes, got halted a number of times along the way. And it's very tempting to want to get into something like that, and this is where it comes down to having a process and being disciplined. I even have to admit, for half a second, or maybe a half of a second, I thought about buying it to participate in it. And then I just said, no way. I just do not do this. I do not do this because of what happened. Now, it ran to 77, then it got halted, and then I think it opened at like 40, and then it got halted, and then it was 20, and then this morning it opened down another 50%. So if you bought it anywhere along the way yesterday, you really aren't following the rules, you're chasing the price. And look, I can't say I've never done that in my career, but this is why we have a process of discipline. Because you get caught in something like this, it can really be devastating. And the main thing about it, besides losing the money, which would be really tough, if you bought it at 60, I mean, you didn't have a stop. It got halted, and the next move was 40. Are you gonna take a 33% loss in minutes like that? Most people aren't. And so the main thing is just it would really eat at me. It would ruin my psychological mental capital if I had bought that stock. The loss would be bad enough, but man, it would just put me over the edge. I would be so mad at myself for not staying disciplined, staying within the rules, staying within the process. And then if you just you just decided, oh, I'm going to wait for it to bounce back, it's game over. It's not bouncing back. It's $9 as we sit here. Can it go to 12? Sure. But that's not going to do you any good if you paid 20, 30, 40, or anything like that. So the main point to this, the lesson is stay disciplined, stay within your approach. Sometimes they're going to keep going up. And you have that FOMO, that fear. Gosh, I could have made some money in that one, but think about these ones. I will print this chart, and I'm going to tape it on my screen as a reminder to stay within the approach, whatever your approach is. Everybody has a different process. Our process can slim. Even the guys in house that run money, and the guys that have come through that have run money, their foundation is Can Slim, but they all have kind of a different style. Charles does it a little bit different than Mike, who does it a little bit different than Arusha, et cetera, et cetera. But the foundation that we have, the process is sound. So stay within those rules and try not to get tempted by things like this. All right, so let's go to the quote of the week. No surprise from a podcast. Bernard Barchet, I had never heard of her before, but it was nice. She had a great interview on one of the podcasts I listened to. And she said, they used to ask all the time when I was at a hedge fund, when we were raising money, what's your edge? What's your edge? That's a common question. If you're in the business out there raising money, why are you different than everyone else, right? So it's just another way of saying, what do you think you have that other people don't have? And everybody out there, whether you're running other people's money or your own money, you should really know what your edge is. If you don't know what your edge is, you should really know what your, I'm gonna butcher this a little bit, but what I want to say is where you don't have an edge. So I am certain I do not have an informational hedge versus the institutions, versus the trading algorithms out there. They're faster, they have more information, more boots on the ground at Fidelity than I will ever have. So not knowing where you don't have an edge is valuable as well, because I don't try to pretend that I have an edge with information. Speed. In the 90s, I had an edge. I was very fast at entering trades, grabbing stock before it would break out. The market makers used to get mad at my broker because there was me and a colleague of mine, and we were buying breakouts, and they were shorting it to us. And this was the 90s, and everything was working. So I had a speed edge, but then that edge is gone. It's gone. I do not have an edge versus the robots, the algorithms. So those are two things I know I don't have an edge at. So knowing where you don't have an edge is important. As an individual investor, there's a handful of places where you can have an edge. You can be 25, 35, 85, 185% invested. So you have an edge to move around as far as your percentage invested. You can be zero. You can be in cash. The institutions, mutual funds, pensions, they can't go to cash. So that's one of your possible edges. You also have an edge in position size, I believe. So if you have a really strong idea you can have 10, 12, 15, 20. You really want to press 25, 30. Bill would really press if he had a really strong position back in the day. So you can, that's an edge versus the institutions. Now, if you're not doing that, if you're not using that position sizing, that's fine. But at least you know where you're not, what I would say, using, or gosh, I'm trying to think of what I'm trying to say, but you're pressing your advantage. That's the word I wanted. Pressing your advantage from being an individual investor versus the institutions. So think about what your edge is. Can Slim, I think, is an edge. It's stock selection. It helps you to find stocks, helps you to time the stocks. Stopping out, getting out of losers quickly is an edge. A lot of institutions, not that they don't, maybe it's not that they don't want to get out of these stocks, they can't. If you're in XYZ and you have, a million shares and the gap's down on earnings, you can't get out on that. It's going to take weeks to months. That's an edge that you have where you can get out fairly quickly within seconds. Literally, you might not like the price, but you can definitely be out. Okay, so here's our contact information. Reach us at marcussmith.com, 800-831-2525. Have a great weekend, everybody, and we will see you next week.